In this video, we'll be going over the IRS notice CP01H. So if you received a CP01H video or a CP01H letter, then this video, we're going to break down this letter and help you better understand what it means and what your next steps should look like. So let's go ahead and start with the top right-hand corner. You'll see certain standard information that is common to all IRS notices. You'll see the notice type, CP01H, the tax year, the notice date, in this case, March 1st, 2015. I'm going to take a moment to just reflect on what the notice date means. So a lot of taxpayers make the mistake of not paying attention to this, and then later on the notice has a reference to a deadline of something that the taxpayer is expected to do. So maybe 30 days after the notice date, 60 days, whatever it is, if you don't respond within that period of time, then the IRS's default assumption is that you agree with the IRS position, the assessment, whatever the case may be, and it makes it that much more difficult for you to present an opposing viewpoint. For example, in this case, this notice says that the IRS was not able to process your 2014 return because as it turns out, the primary taxpayer or the spouse on the return was deceased prior to the tax year shown. So if there's a due date, which I don't see one here, but if there was, then you would have that period of time to contact the IRS, to fill out a form, to do some sort of corrective action if you were in disagreement. And then if that time passes, the IRS's natural assumption is that you agree with that assessment and they're going to take the next appropriate step. Whereas if you took the time to respond, then the IRS would have to go in a different direction based on your response. So it is important to take note of a notice date, and if there is a deadline, if there is some sort of timeline in the notice, then it's usually referred to that notice date. So 30 days would be 30 days from that notice date. So that leads me to the other topic, which is, in this case, it's not apparent because the taxpayer's name and address is redacted, but one thing that you can do for yourself is to make sure that the IRS always has your current mailing address. So if you file a tax return with a new address, then the IRS updates your tax records accordingly. However, if you move after your tax return is filed, say you file your tax return in March or April and then you move in May, then the IRS will not receive any update under normal circumstances until you file the tax return the following year. This correspondence may come out at any time, even if you're not expecting correspondence. So if the IRS sends a letter to your house and it happens to be your old house and you do nothing about it because you didn't know, then the IRS sees that as a reflection upon the taxpayer. And again, it makes it one step more difficult for you to resolve any issues if you have a conflict. So keep your address up to date, and you can do that by filing your tax return. You can contact the IRS by phone, validate your information, and then update them over the phone. Or you can file IRS Form 8822 or IRS Form 8822B for your business. We'll put links in the show notes to those, to the resources we've created about those forms. And then you'll see your social security number. You should make sure that that's correct, and then a contact phone number. So in this case, as I mentioned briefly, this CP01H notice is basically because the IRS is not able to process your 2014 tax return. So they're going to tell you why. And in this case, records indicate that the person identified as the primary taxpayer or the spouse was deceased prior to the tax year. So, and this is based on information the IRS receives from the Social Security Administration. So generally what happens is if a taxpayer dies, then in that tax year, the executor of their estate or their personal representative will file the tax return on behalf of the taxpayer in that year as if it was a normal tax return. And the primary thing is that they will mark deceased at the very top of the tax return so that the IRS knows that that is the final tax return for that taxpayer while they were alive. Any further taxpayers will, or any other tax returns will be estate related, trust related, things of that nature. But as far as that individual, that would be their final tax return. So then the next year would be some sort of estate return, or if that person had a company, whatever it is. But that individual will no longer have a tax return. So if the person's representative does most of the things that they're supposed to do, one of them is to notify the Social Security Administration that that person passed away. This is very common for people that are receiving Social Security benefits. They get turned off so that they don't have to get repaid, or they minimize that amount of overpayment. That's a natural thing, but it's also something that people that are not collecting Social Security should be aware of to do. And one of the reasons is because Social Security Administration shares a lot of information with the IRS, and that's a two-way street. Social Security records get updated, the IRS records get updated. So that's why this notice got generated. So as a result, the tax account for that individual gets locked. So that's why your tax return was not processed. So if you're the person that receives this and you find out that you died from the IRS, then you can take some corrective action. So if your record is in error, then you would need to contact the Social Security Administration to make sure that they're aware of the error. And then after that, then you would need to send a copy of the CP01H notice, a written request to unlock your tax account, and a photocopy of an ID, passport, driver's license, your Social Security card. Well, that's not a photo ID. Other valid U.S. Federal or state government issued identification, so like a voter ID card or something like that, and then your tax return with an original signature. So, and then keep the notice for your records. And then if your address has changed, you can visit the IRS website. So there is additional verbiage, but not a whole lot of additional instruction. So there's a hyperlink here. We're going to click on that and see what else this might say. So it basically reiterates that this account is locked because it belonged to an individual that their records say passed away. So if you need more information, you can always refer to that. But it basically says the same thing that we just talked about. Contact the Social Security Administration, correct your records, and then afterwards follow the instructions. Now, if you're the spouse of a deceased taxpayer and you receive that, then you should probably see your tax professional to correct that tax return so that it gets accepted. And the most common thing is probably filing a joint tax return when you should be filing as a qualifying surviving spouse or as a single taxpayer, or in the year afterwards, if you're still able to file jointly, then just being able to mark that your spouse was deceased. So we'll put links in the show notes. That's all we have for this video, but we'll put links in the show notes to the appropriate forms that may be pertinent to your tax situation. If you like our articles, please subscribe to our newsletter. It's pretty easy to do on our website. If you go to teachmepersonalfinance.com and you find an article that you like, you should see the opt-in somewhere during that article. And if you like our YouTube videos, please subscribe to our YouTube channel. If you have any questions or comments, or if there's something that you'd like to talk about in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.